Good morning and thanks for tuning into the trade setup. I'm Neeraj Shah. It's an interesting morning of trade considering that we are on the cusp of a bunch of events. Remember, the FI buying in India is looking very aggressive in the last 3 days, about $1 billion worth of cash market buying by the FI. So there is a bit of a green zone out there. Let's take stock of the markets. First, the US market should come up on your screen, and the Nasdaq had a bit of an iffy day yesterday, down close to you could argue a percent or thereabouts. So and the Dow and the S&P 2 sulking a little bit. The futures as we speak are though marginally in the green, if you will. The other cues, the 10-year bond yield at about 4.04 or thereabouts. Yes, 4.04%. Dollar index steady at 110 odd. CPO VIX lower. So no big shakes out there. It's looking largely pretty steady. Maybe the SGX Nifty as a result of that is pointing towards a start which is marginally in the green, about 40 odd points. No, it's increased actually, 123 odd points. So 18,184, the going is very good. Remember, we're entering a slightly busy release calendar for the global markets per se. So there's a Fed decision tomorrow. There's a BOE decision on November 3rd, US jobs report November 4th, midterm elections on 8th November, CPI data on 10th November. So the global markets could be in a bit of a tizzy, but India seems to be charting a bit of its own course of late. And therefore, as long as the global markets don't buckle down too much under pressure, we should be okay. Even if the global markets are steady, I think that should be positive for Indian markets. And remember, sectors are taking turns to perform, as we'll discuss in the trade setup. But sectors are taking turn to perform. So we need the markets to be steady. Even if the markets don't crack too much, I think that's positive for individual bottom-up theories. So what's the trade setup therefore? I think markets are unlikely to get unhinged on small Nasdaq corrective move. Cement and capital goods led the up move in trade on Monday, and very likely that that will continue because cement seems to have found a little bit of its mojo. Like I said yesterday in the trade setup, that a bunch of smart money are talking about cement as the dark horse, and boy, it just happened starting yesterday itself. But capital goods too, after what L&T has done, it seems to be pointing towards some bit of green shoot. So let's wait and watch. A retail subscription in DCX shows the appetite for defense-related themes. Day one viewers, 8x subscription for the retail quota just shows how much appetite is there for anything related to defense. It'll be quite interesting to see how the eventual DCX subscription number ends up, but just goes to show the appetite for defense, and any good story in defense is getting lapped up by retail, and retail has now become a really important participant in the markets, right? So that's the beauty of it. Yeah, thanks Virat for bringing this. Look at the subscription numbers and what Virat is highlighting: 8.71 times. I mean, you can see it on your desktops. Maybe you can see it on your mobile screen as well. But yeah, this is really interesting. And of course, auto sales will keep the key sector buzzing today. Keep in mind, the releases from Hero, from a couple of others, showed that they had the best festive season in a number of years or whatever. And therefore, you would expect that the October monthly sales data, because of Dussehra as well as Diwali sales, will be very robust. Won't be surprised if the numbers are sparkling. Of course, keep in mind, in a bunch of cases, there are, I mean, all the cases, there are expectations out already. So they need to perform better than estimates for the stock to get a further reaction. Maruti is on a roll. Some of the others are on a roll. So that has to be borne in mind from a trading perspective. But purely from an investing perspective, these stocks are doing really well for themselves. Earnings today include in Adani Ports, Sun Pharma, and Tech Mahindra from the index perspective, Nifty, and then a bunch of other important ones. Lodha, Varun Beverages, likely expected to have a good quarter. LIC Housing Finance, Voltas could be an interesting one, and JK Tyre could be an interesting one. We're talking to management tomorrow, so it'll be lovely to see that. By the way, we're speaking to data patterns today. We're speaking to Tata Steel tomorrow. So a bunch of very important results conversations lined up. Data patterns had a really strong quarter. It'll be interesting to see what the management has to say. Again, a defense-related theme. Stocks to watch today. That's the key thing. So first, the Axis Bank, Bain Capital will sell stake. Oh, sorry, before that. Sorry, my bad. I confused Virat. First, I want to talk about a sector in focus, and that is cement. Like I mentioned that a lot of smart money is talking about cement as a dark horse. Now, yesterday, if you see what happened in cement, Ultratech, Shree, JK, Dalmia, all of them gained over 4%. Ultratech closed above its 200-day EMA, which is at the level of 6438. And the traded volume in Ultratech was 2.5 times the weekly average, and the delivery volumes was also 1.6 times the weekly average. High delivery, high traded volume, and on that high traded volume, the delivery percentages were higher, which showed the strong delivery-based buying. Dalmia Bharat closed above the 200-day EMA as well, with 2.2 times the weekly average traded volumes. So clearly, there's a lot of money that came in and bought into cement as a theme, lock, stock, barrel. Today, there is a note from Motilal Oswal on JK Cement. They've upgraded the stock with a 17% upside, and it had seen some bit of long build-up as well. So large, mid, small, everything in cement seems to be rising. Maybe it calls for a special piece, the way we did for PSU banks. I think I'll try and do something around cement maybe today or tomorrow. But clearly watch out for this pocket. It seems to be attracting investor interest. Now, the stocks that will attract both trading and investor interest today, the key stock newsmakers today. Axis, obviously, all of you know about this. The block deal, Bain Capital will sell stake in Axis via block deals today, likely at a 2% discount to closing price. So do watch out for Axis, and depending on the appetite that it gets, I would believe that private banks will get a lot of appetite, and Axis has really done well in the last few days. It's now trying to bridge the gap that it has with ICICI Bank on the valuation front. So Axis has done really well. I really doubt that that there will be a overhang of this stake sale on Axis Bank. If anything, it will get quickly mopped up. Watch out for Axis. Watch out for L&T. Extremely strong set of numbers, I thought. Revenues up 23% at 42,000. The expectations were 39,149. Operating profit margin, that's the key thing, right? 13.7%. The Bloomberg estimate was 11.2%. PAT up 26% at 2819. The Bloomberg estimates was 2334. It was all rock solid for Larsen and Toubro. I couldn't find too many faults, but for the fact that in the commentary they said that maybe margins could have a little bit of pressure, but otherwise rock solid for Larsen and Toubro. Jefferies as buy rating, the target price has been raised to 2455 from 2215. They say that the Q2 EBITDA 7% better than consensus expectations. Order flow growth strong at 23%. The management maintained the 12 to 15% YOY order flow and revenue growth guidance with confidence in touching the upper end, which is a big thing. Also, the caution was sounded on the margin improvement. They believe, Jefferies believes that L&T should benefit from execution and margin recovery as impact of supply disruptions and sharp commodity price rise ease. Frankly, had it not been for GHCL viewers, I would have told that L&T will well be the stock of the day, and it could still be the stock of the day today because I really thought it was a strong set of numbers. And you can argue that the stock has done X, Y, Z over the course of the last 1 week, 1 month, 3 months. But I still think that from these levels, just purely on the back of the numbers and the confidence of the management, there is room to go. Brokers are extremely bullish on this one. You don't need me to tell you that the stock will do well. Bharti Airtel, the numbers were okay, except for Jefferies, most have been bullish. But let me first tell you the numbers. Revenues up 5% at 34526. The estimates were 34,000, so largely in line. EBITDA margin 51.3 versus 50.7, so that's a beat there, marginal at that. And the net profit number, though, while up 33%, marginally lower than what Bloomberg was estimating. Now, how to read these numbers? A bit of a mixed bag. CLSA believes that these numbers are strong. They were buy with a target price of 930. They said that Q2 India mobile revenue and ARPUs are up about 4% quarter on quarter. They see Bharti recording 22% India mobile EBITDA CAGR by FY25, and 2Q performance leaves upside potential. And despite 5G capex, which is a big overhang in the minds of people for telecom companies, they see hefty cash flows driving deleveraging to 1x EBITDA and pre-tax ROC to 18% by FY25. CLSA estimates. If Bharti does all of this, then it's great news. But yeah, and I think most brokerages, like I said, have sounded off the positive note, except for Jefferies, which I think has said that they are downgrading to hold or something like that. So that was the only one which was sounding a bit cautious. Otherwise, most brokerages are sounding bullish on Bharti Airtel. Tata Steel, JSW Steel performance was not good. Tata Steel, not great either. Revenue is down 1% to 59,877 versus 56,000, but EBITDA margin completely come off. The Bloomberg estimate was 13.3. which was also weak. The EBITDA margin is at 10.5%. The net profit down 87% to 1514 crores. The Bloomberg estimate was 3154 crores. Even on a day like this, which is likely to start off well, Tata Steel, which has already corrected, might likely see some downward pressure. I think it was a CLSA note which has downgraded the stock, and the target price has been cut to 90 rupees. Well, it's something that's gone kind of awry for the steel companies. Bear in mind though, if the government changes the policy on um, export duties, then that will be a shot in the arm. For now, though, it's not looking all that great for Tata Steel. Do watch out for this one. Like I said, I would have called L&T as the stock of the day if it was not for GHCL. And to my mind, a very robust quarter. Revenue is up 71% at 1381 crores. EBITDA 153% at 433. EBITDA margin at 31.4 versus 21.3%. Net profit up 222% at 300.46 crores versus 93.2 crores. More than 3x jump in net profit. Quite a stunning performance from GHCL. Again, a stock that is likely to do very well. TCI Express, not bad. Revenue is up 7%, but EBITDA margin went up quite strongly, nearly 200 basis points, which stood out for me, and which is why I brought these numbers. Net profit up 22% at 37.79 versus 31 crores. So yeah, good set of numbers, quarter on quarter, may do well. Some other results include an Equitas Small Finance Bank, asset quality improved, PAT up nearly 2x, again a stock that could do well. Castrol, EBITDA margins corrected sequentially. LT Foods, revenues were up 13%, but margins declined 170 basis points. Timken India, EBITDA margin at 19% versus 22.2%. Not a good set of numbers for Timken India. Maybe the stock has a bit of a reaction negative. Real estate, do watch out. There's a fast, as per Knight Frank India, the fastest 1 lakh property sale registrations recorded in Mumbai this year. I know people are finding faults with the fact that the month-on-month or the YOY number is actually slightly lower, but you would argue that the momentum continues despite all the headwinds, despite cost pressures moving up, etc. So for now, don't find a fault where there is none, I would say. Real estate companies may not do as much, but the real estate ancillaries certainly remain in focus, because if there are so many flats getting sold, the demand for ancillaries would be very strong. Yesterday we had a very good conversation with Abhay Agarwal of Piper Serica. He's spoken about what kind of real estate ancillaries are they betting on, and with rationale thereof on talking points. So it might be a conversation that you might want to tune in and hear out a bit. Like I said, there is a note from Motilal. I'm not giving graphics for that, but hear me out. Motilal Oswal note on JK Cement. They've upgraded the stock, so do watch out for that one. Do watch out for BEL. The con call numbers, the con call comments, and the con call reports seem to be pretty good. So maybe that's a stock that could do well. The stock called Vishnu Chemicals, which had a good quarter. Saregama posted highest ever quarterly revenue with stable EBITDA margins, so that one could do well. And the interesting one, viewers, just before I wrap up, is VST tillers and tractors. They got back on track after a pretty derailed quarter one. They expect very strong second half performance. And I think when I look at what their con call suggested, I am reading out a note. They are targeting to achieve 3,000 crore sales by FY26. The trailing 12-month sales were 854 crores. This implies a 45% top line CAGR till FY26. That is very, very strong growth guidance, you would argue, for VST tillers. Tiller sales will probably grow about a 20% CAGR. So tillers plus tractors, things look okay. Maybe VST tillers could be a stock that could actually do well in the session. So do watch out for that as well. So that's the long and short of the trade setup today. A lot of stocks that might react. Watch out for cement, watch out for defense, watch out for PSU banks. These are the spaces that are doing well, and you want to probably stay parked in those as opposed to sulkers. Thanks so much for tuning in. Have a safe day ahead.